Hello, today we will be discussing key highlights of our annual Global Private Equity Report, in which partners from Morrison Foerster's private equity team review the key trends from 2023 and present the outlook for 2024. I'm Marcia Ellis, Global Co-Chair of Morrison Foerster's private equity practice.
I'm Patrick Heward, also Global Co-Chair of our private equity practice.
As 2023 closed, many of our predictions for last year's global PE market came true, including:
while tech investing was down in 2023 compared to prior years, AI and machine learning emerged as the top two growth sectors globally in terms of PE deal volume.
Private capital investments in distressed assets increased, particularly through direct lending from credit funds and use of structured equity investments.
While some industry sectors experienced a slowdown, fintech and healthcare deals remained strong, and, as mentioned earlier, AI was the leading growth sector for PE.
Although there was a significant drop in US, UK, and EU cross-border investing into China, Asia-headquartered funds continued to invest in China, albeit at a slower rate than in 2022, with preferred forms of investment activity including take-privates due to the fact that repricing of listed companies had already taken place, whereas founders of private companies often stubbornly refused to sell into a down market.
PE funds increased their focus on portfolio companies' profitability, placing a substantial emphasis on portfolio maintenance and management of existing credit facilities.
Debt market terms have tightened, and bank lending in particular has been conservative, resulting in direct lenders answering a need and taking significant market share from banks, creating a flourishing private credit market valued at $1.6 trillion.
Because owners often did not want to sell in a down market, exits in the US and Europe were in fact slow, while in China, the government's failure to jumpstart the market through stimulus measures led to a near stalemate in exits.
EU ESG and sustainability regulations adopted in 2023, which will impact companies throughout the world, made clear that ESG requirements are here to stay despite a growing backlash in the US.
Now let's take a look at what we expect in 2024.
The projected interest rate cuts by the Federal Reserve should stimulate deal activity. When combined with the high level of dry powder, return of bank activity, and private company repricing, this should result in an uptick in PE deal-making, at least in the US, UK, Europe, and Southeast Asia.
However, while interest rate cuts will provide some degree of relief, there will continue to be distressed M&A activity and necessary restructuring of highly leveraged businesses.
We anticipate that deal activity in the middle and lower middle markets will continue to be active and, in fact, will increase in 2024.
Having filled the gap where banks backed off on lending in 2023, direct lenders will continue to offer personalized capital solutions and strong competition for banks.
Optimism about tech M&A remains high, with over 58% of respondents in MoFo's 2023 Tech M&A survey forecasting an increase in tech M&A over the coming 12 months.
With technologies like AI and telemedicine reshaping the healthcare landscape, there should be opportunity for PE deals in tech-driven healthcare.
Ongoing geopolitical concerns and the upcoming US elections will create a level of uncertainty that could affect the global economy and keep some investors on the sidelines.
With tensions between the West and China continuing, China will look for new sources of fundraising in regions such as the Middle East and Singapore.
The strong appetite of PE sponsors for take-privates will continue following their success in the last year and will potentially increase in 2024.
While the broader term ESG may become less widely used, sponsors and portfolio companies will instead focus on specific elements of ESG, such as DEI, climate, cyber, and responsible tech.
Apart from the global trends we just covered, our report also includes our predictions for the US, Latin America, Europe, the UK, China, Southeast Asia, Japan, and India. We also discuss some of the most relevant themes in the PE industry today, including ESG, special situations, life sciences, food and ag, and data centers in more detail.
We wish to thank all of our global team members who contributed to this report.
Please download the report to read more and follow us on MoFo PE Briefing Room to receive insights on the global PE industry. Thank you.